Hello everybody. We will be starting with our accountancy class today. So, what we will be doing in it. It will be beneficial for JKSSB Finance Account Assistance. We will practice MCQs as well, and free content will be given over here. So, over here we will cover meaning and definition, objective and scope, branches of accounting, basic accounting terms, accounting concept and conventions. Then we will practice MCQs. Alright, then we will do quick revision. So what is the meaning and definition of accounting? First of all, we need to know the meaning and definition of accounting. So accounting is the art of recording, classifying, summarizing financial transactions even in a significant manner and in terms of money. This part is very important. Only in terms of money, the transaction which are being done in terms of money, only those are recorded in accounting period. All right, and the parts of accounting. The parts of accounting are recording, classifying, summarizing. All right. So what is recording? Recording is the systematic entry of financial transaction in the books of account, and we do it in journal. We will study it further. So for now, just remember systematic entry of financial transaction in book of accounts as journal. Then grouping transaction of similar nature is known as ledger posting. That way we classify the transactions. All right, we classify various type of transaction, which is incoming transaction, which is outgoing transaction, which is liability and all. We will be doing that in the ledger posting. So the next part is summarizing. So in summarizing, we prepare statements like trial balance, profit and loss account, and balance sheet. All right, in that we see the position of a business. All right, and at the last part of the accounting is interpreting, that is analyzing the financial results to aid decision making. Right. So next is objective. So what are the objective? What for accounting is needed? So first of all, we have read that systematic records. We need to keep the systematic records of the business to maintain permanent and systematic records of all the business transaction, and profit and loss determination to ascertain net profit and net loss during an accounting period via profit and loss account. In profit and loss account, we see the net profit and net loss of an accounting period, and for that determination we do accounting. So next part is financial position. We prepare balance sheet to show our position in asset and liabilities and capital as well. We will study what asset, what is liability, and what is capital in the upcoming videos. So what is legal compliance? That our company comply with statutory requirement under the Companies Act and Income Tax Act. All right, we will study these acts also. These are also in our syllabus. So decision making is also a part of accounting, is also an important objective of accounting. So also preventing fraud is an important part of accounting. So next part is branches of accounting. So for us important is financial accounting and cost accounting. Right, so we will be studying a little bit about tax accounting, management accounting, also forensic accounting, and government accounting. In our syllabus, what is most important is financial accounting and cost accounting. So in financial accounting, we record day-to-day transactions. For now, just remember day-to-day money transactions we record. And in financial accounting, what we study is we prepare final accounts. All right, trading account, profit and loss account, and balance sheet. So in cost accounting, what we do is we determine the cost of production and services. So cost accounting is the first part of the accounting. All right, so first, not the first step, but first part of the first part of a business. So for starting a business, we need to do cost accounting so that we can get an estimate of what amount of money is going to be used in a business. So next part is management accounting. We use the financial data for planning and control and decision making. It include MIS report, etc. So in tax accounting, we do tax planning. We see that if our company is compliance with Income Tax Act, GST Act, or we do calculation of income tax. So government accounting is also important, and financial accounting is also an important branch of accounting. So these are important for academic purposes and not for the JKSSB exam. So these are few terms related to accounting. In transaction, we only consider the transaction that are related to money. For example, purchase of a good of 10,000. So capital, what is capital? The initial investment is known as capital, right? The capital is amount invested by the owner in the business. Whatever the owner amounts, so owner puts 5 lakh in a firm as an example of drawing. And next part is asset. Asset is the resource owned by business having monetary value. All right. So capital is what we invest, and asset is what we have invested, and that is gonna give us monetary values in future. All right. For example, land, machinery, cash, debtors. Debtors are those who owes us money, and there is another term called creditors. So creditors are those who we owe money to. So this is a part of liability. Liability is the people who we owe money to. All right. So next part is revenue. We will be seeing revenue. What revenue is? So revenue is the income earned by a normal business activities. For example, sales, commission, or rent received. Then comes expense. Expense is the cost incurred to earn revenue. All right. For example, salary, rent paid, depreciation, etc. So profit and loss, we all know the excess of revenue over expense. All right. So loss is excess of expense over revenue. So our our formula is profit is equal to revenue minus expense. If revenue is higher, expense is lower, then we get profit. But if revenue is lower and expense is higher, we get this in negative. So we get what we get as loss. All right. So here we can see that if sales have done of 50,000 and cost is 70,000, we incurred loss of 20,000. So next part is debtor. As we have seen, the person who owes money to the business. Creditor is whom we owe money to. Then we come with goods, item bought or sold on in a normal course of a business. For example, we have a stationery business. All right. So we sell books. All right. Then the good will be books. So next part is stock or inventory. Stock or inventory means the good lying unsold at the end of accounting period. Okay, for example, let's say for example we have uh, at the end of the day, at the end of the accounting period, we are left with the one shelf of book, right? One shelf of book, then that will be our stock and inventory. All right. So the next part is voucher. As we all know what voucher is the bill, right? Bill or documentary proof. The example is bill, receipt, or invoice. So account is summarized record of transaction relating to a particular person or item. So if we have bought books, all right, from, for example, let's say classmates, we have bought notebooks from classmates, and we are gonna sell those notebooks to you, and that that the account that we will keep of classmate will be the summarized record that we will keep will be account. So the next part is journal. Journal is the book of original entry where transactions are first recorded. So this we have to remember. Excuse me. So this we have to remember. What is journal? Journal is book of original entry. These two things we have to remember. Book of original entry is journal, and principal book of account is ledger. And trial balance is the statement listing all the debit and credit balances to check the arithmetical accuracy. So what is trial balance? Trial balance is to check arithmetical accuracy. We will study all the journal, ledger, trial balance in further videos. We have to see how these are made. So so the next part is depreciation. Depreciation is the reduction in the value of a fixed asset due to the usage, wear and tear over time. Right. So next part is goodwill. Goodwill is the reputation or the brand value of a business that generate extra profit. Brand value, we can say if we are ordering something from H&M, right, or we are ordering something from Amazon, we are ordering a t-shirt from H&M and t-shirt from Amazon. So what will have a more brand value? H&M, right? So because they have invested a lot in advertising their t-shirts, so Amazon list various other t-shirts as well, various other brands as well, various low cost brands as well. So H&M have a brand value or Nike have a brand value that is called a goodwill. Right, so working capital, we have to remember this. Working capital is current asset minus current liability. Working capital is like, we can see that, we can just imagine that whatever is there right now, whatever is in work in the business right now. So current asset minus current liability is working capital. This is important, we need to remember. You can add it in your notes. So next part is accounting principles that we have to remember. We have, this is important, this is important for us, 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 and this is important for us. So we will study all one by one, but these are most important for us. So what is business entity concept? Business entity concept is that business is separate from its owner. We treat business and owner as two separate entities. All right, we will have a different wage or salary for the owner, but we consider different. All right, going concern concept states that business is assumed to continue indefinitely. Asset is valued at cost and not at liquidation values. So next part is dual concept, credit and debit. We need to remember we have two things, credit and debit. So every transaction have two aspects. Also this is most important, asset is equal to liability plus capital. This is most important uh, term, this most important e equation of accounting. So we have got one question from this equation itself last year, and that was straight question, that is what is the equation of accounting, right? So we get few numericals also. We will be given liabilities, will be given assets, we'll have to calculate the capital. All right, so this you'll have to remember. So next part is matching concept, expense of a period matched against revenue of the same period. We have to match the expenses and revenues of the same period. It's not like that we can measure the revenues of using measure the revenues of 2014 using 2013 data, or the expenses of 2013. So this we have to remember, matching concept. So next part is consistency over all the year of accounting term. over a period or a year to year, we have to use same accounting method for comparability. So next part is measurement concept. Only the transaction that are recorded in money can be taken in consideration. Human skills or morale is not recorded, all right. So cost concept is asset are recorded at actual cost, not at historical cost. Not that not that important for us. So next part is accrual concept. Revenue recognized when earned, expense recognized when incurred. Alright, not when cash flow. Just remember this: revenue when earned, expense when incurred, not when cash flows. So the next part is realization concept. Revenue recorded only when earned. Alright, revenue is recorded only when earned. That is known as realization concept. So next part is conservatism principle, which is anticipate losses but do not anticipate profit. Okay, lower the cost or the market value of the stock. So this we have to remember: anticipate losses and not anticipate profit. That means conservatism principle. All right, so the next part we have to, let's do some MCQ practices. So what accounting is defined as the process of identifying, measuring, communicating economic information to permit informed judgment, not ethical. We don't need to see ethical in this. We don't need to see political or legal thing in this. We need to see informed judgments. All right, so the next part is the concept which assume business will operate indefinitely is going concern concept. So conservatism is, what is conservatism? So anticipate losses and not profit. So the other one is accrual concept. What is accrual? So accrual is revenue is recognized when earned. Right? Revenue is recognized when earned. This we have to remember: the revenue is recognized when earned and expense is recognized when incurred. So next part is cost concept. So we'll have to see cost concept as well. Asset recorded at actual cost and not at historical cost. So the next part is separate from business transaction, that is business entity concept. This means that business and owner are a different entity. We have given explanation as well, you can read. So do not anticipate profit but provide for all the possible losses. So this is conservatism principle, says anticipate losses and do not anticipate profit. So the accounting equation we have studied, that asset is equal to liabilities plus capital. This is the fundamental equation of accounting. So next part is which of the following is not a branch? Financial accounting we saw, social accounting we saw, cost accounting we saw, agricultural accounting is not a type of. So the next part is matching. So we got the matching in the question only. So this is matching concept. Matching concept is expenses are matched with the revenue that are generated in same period. So which book is called book of original entry? Journal entry. Journal. This is a statement. This is a statement. Whereas ledger is book of. You can comment down, but it is of. So the next part is good returned by the buyer to the seller are recorded in purchase return book. We will see this in upcoming lectures. Just hold for it. So an asset which can be converted, we'll see this as well. These are the questions that we need to see. So the process of transferring entries from journal to ledger is called posting. We will see this as well. Working capital is calculated as current asset and current liabilities. This we have seen in the equation. So the concept which state that same accounting period should be used, that is consistency. So which of the following, if this also will, when we will see account and its types, so then we will see. So other are, so this also we saw that trial balance is used to check arithmetical accuracy of the book. So these are something we need to see. Okay, so we got this question in JKSSB Finance Accountant Assistant 2019. I'm not sure about the year, but the excess of the revenue over expenses terms as profit. We have seen it in the lecture itself. The excess of revenue is called profit, but it is loss. The excess of expense over revenue is termed as loss, right? So which of the following is a current liability? Long-term bank loan, share capital, goodwill. Goodwill is not even a liability. Goodwill is an asset. All right. So this is liability that we will see in the upcoming lectures itself. So the business will continue to operate. That is going concern. So the next is journal is called as book of original entry because transactions are first recorded here. And what do we see transactions from? That is voucher. What are different examples? Bill, receipt. That this we will see in the upcoming lecture today. So these are some. So this is an also a PYQ that we can do. If assets are 5,000 and liability is 5 lakh, liability is 2 lakh. Alright, then the owner capital will be, so as we have seen, asset equals to capital. So what was the equation? The equation was asset is equal to capital, asset is equals to capital plus liabilities. All right, so here what we have to find is capital. So what will be capital? Liability, here it is in positive, over there it will go in negative. Liabilities minus asset. So what are assets over here? 5 lakhs, all right, and 2 lakhs, so 3 lakh will be the answer. So the next part is which concept said that only monetary transactions, so money measurement concept as we have seen. So these are the some revision: accounting, recording, classifying, summarizing, interpreting. Alright, these are the parts of accounting. So business entity concept, we saw that business is different and the owner is different. Going concern that the business will go indefinitely. The cost concept, dual concept, that is liability and credit and debit balances. These other, we saw accounting equation is asset and liabilities plus capital. Working capital is current asset minus current liability. We saw some branches, financial cost, management, tax, government and forensic accounting. So these are some golden rules that you don't need to remember right now. When we will see when we will learn about accounts and various types of accounts, then we will see these rules. So important terms we have seen. What is debtor? The person who owes us money. What is creditor? The person we owe money to. What is capital? That the owner used to give the initial investment. Whatever owner withdraw from the capital, that is drawing asset. What is asset? Asset is like whatever we have which can convert into like monetary value, like land, building. What is liability? The amount of money we owe to business. Goodwill, for consider this as brand value. Depreciation is the annual decrement or reduction of the value. What is working capital? We have seen current asset minus current liability. Fictitious asset, that we will see in the upcoming lecture when we will see types of assets. So thank you, that's a wrap. So chapter 1 is completed. We will come with the accounting equation and journal entries in the next part. We will see types of accounts and all. So this was just an introductory video of the of the series that we will be providing. Do visit our website I'll be uploading this PPT over there. You can download it. You can use it for revision and other notes and MCQs you can also see. Do comment your doubts and how was the lecture, any feedback if you wanna give. Share it with your friends, whoever is preparing for JKSSB. Also subscribe. Subscribe. Right now I don't have much content in the channel, but for sure in future we will be adding a lot of different lectures from different teachers. Do like also if this video helped. Alright, thank you. And this is more sad face than happy. Okay, anyways, bye.